Yo, welcome to Networking with Nathaniel, a real estate entrepreneur podcast that I started over a year ago at this point, selfishly, so I could talk to really cool, high level people inside and outside of the real estate space. I have an amazing guest that I'm excited to talk to today, and hopefully, y'all are going to learn from Veena Jetti. Veena is a capital raiser, commercial real estate investor, and even more importantly, a wife and a mother. Vina is going to share some of her knowledge, a lot of it probably, inside and outside of real estate. I'm really excited to chat with her about how she's juggling, being a mom to twins, as well as, handling all her real estate and her business endeavors, and how she's empowering women inside the space as well as entrepreneurs. We have a couple women in the audience right now, so I think that this is going to land very well. Vina, thank you for being here. How are you doing?
Hi, thank you for having me. I'm excited to be here.
I was not that the smile is infectious. I love it. I appreciate you being here.
Oh,
Uh, yeah,
Chris.
yeah. there, I have a little cousin that you remind me a little bit of the big smile and just kind of the bubbly.
I
Um,
love that.
yeah, so I love it. I love it too. I don't know if you've watched previous episodes, but we typically will start out the podcast, the episode with what is keeping you busy. I alluded to a little bit of it right
Yeah.
now, but I'll let you answer that.
Oh, gosh, everything. Like you said, I'm a mother to twin 5-year-olds, so that definitely takes a good chunk of my mental and physical energy. I've been traveling a lot because I've been speaking at a lot of conferences and on a lot of different stages. I also am running our private equity company, Vive Funds. So we just closed on a deal here in Dallas last week. And so that's keeping us fairly busy to say the least. We're finishing up a raise on that. So just, trying to get all of our investors in and make sure we close the loop on that.
Is You mentioned Dallas? That's where you're located. Is that where you're primarily investing at, or what does that look like?
Interestingly, no, I have not bought in Dallas since 2018. So
Okay.
it's been 6 years because Dallas is the hottest market in the country. And I just have not been able to find anything that made sense until this deal that we just closed on. And it really only made sense because we were able to assume interest at 2.59%. So that's
Yeah.
what really like shifted things.
How are you finding these deals?
So this one was an on-market deal. So this came to us
Okay.
through a broker. The last one we did, we assumed a 2.77% interest rate in Phoenix. And that came to us because we had actually bid on another one of that seller's assets. And we didn't win that deal. And we are like, we really wanted this asset. They're like, I know, we really wanted to work with you. You guys were amazing. We said, okay. And then we went and looked at the rest of their portfolio and saw this other deal that we really liked. And so we just made an offer on it off market and they agreed to sell it to us. So it worked out really well.
Yeah, that's awesome. I don't know what you want to call it, like tapping into a resource.
Yeah, it was like, I'll say the two major ways right now to find really great deals is either through relationships with sellers directly or through brokers.
Yeah, that's something I'm working on right now. Actually, we bought. We're in the single family space, but
Mhm.
we bought a property in Montgomery, Alabama, and I had to connect to this. We bought it through a wholesaler, but I had to connect to the seller because for the first month or two, we make payments directly to the seller until servicing is set up. And I was like, hey, just in the future, cut
Yeah,
out the middleman, talk directly to us. He was like, well, I am thinking about it. So, hey, conversation's been
I
started.
love that.
Yeah, on buying some more. You mentioned we. When you say we, do you mean like you and the investors that you've brought in as capital partners? What does that kind of look like?
Well, so when I say we from like a decision perspective, I always mean so my sister's my partner at Vive. So that's the first we. And then the second we to that is I have a JV partner that I work with pretty much exclusively.
Okay.
So it's like both the companies making decisions.
What is the JD partner's role?
So It depends on a deal by deal basis, but we're like pretty programmatic partnerships, right? Or a programmatic partner right now. So generally on our deals, like I'll handle legal. We kind of divide on acquisition, but I'll handle like legal, tax, investor relations, equity. Um, Investor communications falls heavily under me as well, and then I'll work with her on like post close. We'll split some amount of the asset management, just depending on which asset. So, for example, in Dallas, I'll have way more hands on in Dallas from an asset management perspective, just because it's like 12 miles from my house. So,
Yeah, yeah.
go in and see it. But then we have assets like, for example, this afternoon, we have our weekly call on two of our Atlanta assets. So I handle those weekly asset management calls there. She'll handle like two of our other assets, our North Carolina assets or whatever. So it just depends on the asset. But generally speaking, we have a list of all the roles and responsibilities, and we'll just divide them
Okay.
up. And then as a new deal comes out, and say, hey, I'm like super slammed with all this other stuff. I can't take on all these roles. Can you take these 5 job functions or vice versa? Or let's hire someone to fill these roles. Let's put them on your payroll. Let's put them on my payroll. Like we kind of mix and match in that way, but we share resources across companies.
Yeah, interesting. So you have like a master list of these are all the things that need to be done, and it seems kind of like exciting in a way that you get to
Yeah.
pick and choose each. Are there anything that you lean towards? Like,
Almost always the equity side.
okay,
I I really actually dislike asset management. It's like I'm not great at it and I don't love it, but I can do it. But my partner is great at asset managing. Like this is
okay,
just a gift that she has. And so I try to like rely on her more heavily for most of those functions. I like the acquisition side personally because like I like to know what we're going into, why we're going into it, how we're, going to look at the deal, what we're going to execute on, what we're going to deliver to our investors. But my favorite part of everything that I do or the world of what I do is the investor relations piece.
yeah. You started your journey before, not before I did, but um, at least before I was aware of your journey,
Yeah.
and it seems like you started from the capital raising side. Is that
No, I started my real estate career actually in corporate real estate.
okay?
I was working at, some of the larger institutional companies. I had an asset that I was on the management side for. It was a $1.2 billion asset in Washington, D.C.
Okay, the White House. No, no.
Obviously.
Yeah.
Actually, interestingly, when I was there, part of my portfolio was the Penn portfolio, which was like 1699 Pennsylvania Avenue, 1700, 1730, and I don't remember what the other, there were like 4 in a row, and we owned that portfolio. So I managed like, because 1600 was the White House. Did I just say 1600 as the first number I said?
No, 1699. I think you said.
Okay, yeah, I was gonna say it was like the block over, so it was like 1699. So we'd have like snipers set up on our roof whenever the president was like coming in and out, or
Oh, really?
they needed like air support or whatever. They would like set up on our roofs. It was cool.
Huh. So you got started in the corporate side of things,
Yeah.
and then at what point, I guess, did you transition to the capital raising? Because that's when I heard Veena Jetty's
Yeah.
name when I joined Step Two. Like that's what
Oh, I
this
love
is.
that.
This is the.
I mean, I love the capital side, so I'm not mad about this at all. It's just I think it's just one component of what I do regularly or have done. So I left corporate America in 2012 and started buying single family homes. Actually, I didn't know you could just invest in multifamily. I thought it was like only billionaires got to do that.
Right.
Actually, I never really thought about it. I don't think it ever occurred to me that someone owns these, other than like institutional funds, right? Like a Blackstone or something.
Yeah.
And so I started buying single family homes, and there was a week where I put 5 houses under contract, and I hated it so much.
Mm.
I hate dealing with single family homes. Um, so I was like, there's got to be a better way to do this. And that's when I met a friend of mine, and we're still friends to this day. We co-invest into each other's deals, and he asked me if we would partner with him on a deal here in Dallas. So in that, like, I kind of went straight into a true GP role where we were doing, due diligence, we were doing acquisition, work, we were like touring the properties and figuring out business plans, and then I would say the bulk of what I did, or I think at least my usefulness in that deal, was on the acquisition and then the capital side.
Okay.
And then, we were post close, we were helping with asset management as well. We had divvied up roles and responsibilities, but that was what my very, very first deal looked like. And then since then, we had just basically done a bunch of deals kind of with this partner and then moved on to our own deals. Very quickly, we moved on to our own deals. And I think I started that first deal I did was like in 2014,
Okay.
2015, it was either 2014 or 2015, like right around a decade ago now. And that was a very successful deal. And so now we have, I bought and sold over $1 billion in my portfolio, and I've raised, I think it's like just over 400 million at this point.
Wow. So
Yeah.
you're like slightly versed at this point.
I know things. I know
I know,
things.
I know. Yeah. I don't let's see here. Shanna asked, is to specify, you mentioned Dallas being the hottest market. Are you talking just real estate in general or specifically multifamily?
Both.
Okay.
Both. But specific, I tend to speak more about multifamily, hazard of the occupation,
Yeah, yeah.
But from a multifamily perspective, Dallas is absolutely the number one market in the country. And then the deal we bought is in a submarket called Addison,
Okay.
which is an even more premium submarket here because it is off the Dallas toll road, which
Mhm.
is the major toll road that goes, I think it runs like north to south or south to north, whatever. And it's 20 minutes north of Dallas and 20 minutes south of Frisco, Plano, McKinney, which is where I live. I live in Frisco.
Okay.
And so like in DFW now, it used to be Dallas Fort Worth. Now it's like Dallas Fort Worth and then like Frisco, Plano. And there's a lot of like investment activity. A lot of corporations have moved to the Frisco Plano area. Like I would love to buy multifamily in Frisco. I've looked at it. I'm so priced out right now. It's
Really?
unbelievable. And I'm kicking myself because maybe back in 2019, 2020, there was a deal that came up like 2 miles from my house. And I toured it and I was like, should we buy it? Should we not? And they wanted like 55 million. I don't remember how many doors it was, maybe like 200 and something. And they wanted like 55 million. And I was like, this is crazy. You want me
Yeah.
to pay like a 5 cap? That's insane. Or 4.5 cap or whatever it was. Little did I know that it would ultimately continue to trade over, the next several years. It traded like 2 more times at 3 cap. I
Oh,
think
wow.
once it traded at like a sub 3 or like close to a 3 cap. And I'm like, oh, if I just paid the 55 million, I could have sold it for like 80 million 2 days
Yeah.
later, basically.
Would
So,
you like I'm a 6-year-old
okay.
cap?
Yeah. Oh, okay. Cap rate. Yeah.
Yeah.
So in commercial real estate, we have like fancy language for everything
Yeah.
that we do. And I didn't make it up. So I just play by the rules. I don't make the rules.
Yeah.
So a cap rate is your NOI divided by the fair market value of the asset. So if you know any two of those variables, you can solve for the third. Basically, what cap rate is short for capitalization rate, and what the capitalization rate tells us is what is the yield or the ROI if you're buying the investment without any taking into account any debt. It's a really quick measure, not the only measure, but a quick measure for whether or not an asset is overpriced, underpriced, priced somewhere in the market. And it's the first like quick and dirty calculation that you can do to determine if you need to actually go to the next level of a deeper dive and do more
Okay.
underwriting on the deal.
And correct me if I'm wrong here. Cap rate is pretty like market specific,
Yeah,
right? So like if
absolutely.
you look at if you're looking at a deal in Dallas and it's a 7, you're like, well, it should be 4.5. Or would
I
that go
want
the
to
other way?
buy at a high cap rate. So the
Yeah,
other
yeah,
way around, right?
yeah,
So if it's a 4, but it should be a 7, I'd be like, what happened?
yeah. What's going on?
I would just think it's an unrealistic seller or there's a typo somewhere.
Okay,
But it's a really good immediate, like, kind of sniff test, if you will, of whether the seller's even remotely reasonable.
okay,
Um, and it's even more so than being like market specific, it's actually sub-market specific too, right? Like I might pay a 4 cap in Addison, or I might pay a 4 cap in Frisco. I probably wouldn't pay that in East Dallas. So it
okay.
depends where you are. Okay, slight edit on this just to make sure that everyone's getting it right. It's
Okay.
NOI is
Divided.
divided by the fair market value.
Yeah. Now, I don't want to get too in the weeds about the cap
Yeah.
rate, but a higher cap rate is potentially has more upside potential, but a lower cap rate is less risky. Is that right, or is it vice versa?
Less risky. So it's relative, right? So the way I look at cap rates, and I think a lot of investors, especially if they're like not really in this space or they don't really do commercial transactions as much, they tend to get hung up on cap rates. It's like one metric we look at because there's so many different cap rates you're looking at, right? So let's say you're selling me an asset. Your goal is to exit as low of a cap rate as possible. My goal is to buy it at as high of a cap rate as possible.
Okay.
And that's where the inefficiency in the market is, right? Because if we both agreed this is always going to be a 5 cap, there's no negotiation. It's just this is the price and that's it.
Mm.
But it's more of a story that it tells you that we look at. So, for example, let's say you're selling me an asset let's say it's in Frisco, and you're like, hey, Vina, this is a 3.5 cap deal. And I'm going to look at it and go, that's crazy. What do you mean you want a 3.5 cap, right? And I'm going to say, you are delusional. Come back to me when you fix it, right? Like just generally knowledge based, knowing that Class B assets in this area are not usually trading for 3.5 cap. But then you might come to me and say, listen, it's a 3.5 cap, but you are in a fixed debt environment because you'll assume debt at 2% fixed for the next 12 years with 5 years of IO. Then I might say, okay, so I'm not negatively leveraged, right? I'm going into it with positive leverage. And I might look at it closer. I might not get to a 3.5 cap, but I might say, I thought this should be like a 4.5 or a 4.6 or 4.7 cap. But I'm willing to pay a 4.2 or a 4 because the debt is so good, I can still cash flow.
Okay.
So
what was IO?
interest only.
Okay.
So
Okay. Sweet.
I'm not paying down principal on the loan. I'm only paying the interest for the first several years. And that's typical on a value add asset. So, and your question about upside, right, is the question really is what is your operating cap? So that's different, right? Like my going in cap might be, call it 4%. But let's say that I know that there is a special tax allocation available in Frisco, and I'm making this up, okay? It's just
Right. Okay.
for example purposes.
Yeah.
And I know that if I use that tax allocation, I can save $1 million on my taxes, which is above the line. So my NOI goes up by $1 million. That means within 60 days, I can be operating at like a 4.3 cap. That might be worth it for me because you don't know that you're not as efficient as I'm going to be on my NOI. So it's like making assumptions around it too. So you want to buy at the highest cap rate, you want to operate at the highest cap rate, and then you want to sell at the lowest cap rate.
Okay. Yeah, you just move it into yeah.
Yeah.
You mentioned that you have bought and sold over $1 billion of real estate at this point. At what point do you look at an asset that you've purchased and go, now's the right time to sell?
Based on what our underwriting does. So we underwrite our assets after we own them. And I
Okay.
think a lot of new investors make this mistake. They don't re-underwrite their assets, but you have to mark to market. That is how you determine how an asset's really performing. It's not based on pro forma. Obviously, you want to hit pro forma, but when you have something like what happened in 22 and 23 happen, where interest rates just shot through the roof, everybody's pro forma was blown out of the water. There's no operator that I know that is legitimately operating that did not have at least one of their assets just completely change what the outcome projections are, specifically because in 2020, 2021, 2022, even 2023, a lot of investors were still buying with adjustable rate debt.
Yeah.
And so if your debt is adjusting, you're squeezing your cash flow out. So hitting pro forma becomes very difficult on most assets. Now, obviously, there's like exceptions to every rule or whatever, but the vast majority of fund managers are facing this same issue because of the debt rate environment and rent softening, right? So I know I'm like getting super technical. I'm like
No,
geeking
no,
out.
yeah. Yeah.
But you're marking to market. You're not marking to pro forma. You are doing that, but you're also, you need to mark to market to know what the true performance of the asset is, because when you have someone buying from you, they're going to mark to market as well. So it's just like there's a whole lot world of what we're looking at when we're buying assets.
Would you very briefly mark to market?
Yeah, so I'm marking it to what the market is doing. Like I'm measuring it against the market.
Kind of comping it.
Comping it, yes. But
Yeah, okay.
it's not so
Like,
much a comp. It's like
yeah.
more of like it's not a true comp where I'm like, okay, I'm buying this asset here. What did the property 6 months ago do that sold a mile away? Like it's not a one-to-one like that. It's more like, okay, generally speaking, what's the state of the multifamily market? Like nationally, what's happening, right?
Okay.
What are interest rates doing? What are most fund managers doing? How are most operators reacting? So like the largest REITs in the world right now have a 50%, or it's actually like a 48% retention rate, a renewal rate on their leases in multifamily, right? So that's like, think about the largest REITs that you can imagine, like multi-billion-dollar REITs with like unlimited resources, okay? When you look at those, they have a 48% retention rate, meaning that let's say you're a tenant in one of the units and your lease is coming due, and I'm going to give you a renewal for it. And you're going to look at it and you're going to go yes or no. You have a 50-50 shot in those assets of whether you're going to renew or not. That means that when I'm looking at our portfolio, I'm saying, okay, if we're above 48%, we're performing higher in this specific metric. If we're below 48%, then we're underperforming in this specific metric. So that's what I mean, like mark to market. It's not like a specific REIT. It's not a specific person, a specific investor. It's like we're all calibrating to each other. And it's, we're seeing with interest rates rising, with national rent softening, it's been a tough 18 months for multifamily without question.
The 48%, the 50 just
Yeah.
around, that seems low.
It is for our portfolio. So in our portfolio, like we have assets that we have like 80 to 90% retention. But this has become a core focus. 4 years ago, this was not a focus for us. We wanted our retention rates kind of on the low end, actually. We wanted it closer to like 30, maybe 40%, depending on the submarket and asset, because at that time, I could give you a renewal. So like, let's say you're paying $1,000 right now. I could give you a renewal for $1,600 and about 30% of our residents would sign that, right? Without anything being done to the asset, which that's my goal. I would love to have that. But let's say you were like, no, I'm only going to sign it if it's $1,200. I'm going to say, no, you can move. Then you're going to move. I get that unit back. I'm going to go spend 10 grand. I'm going to renovate it. And now I'm going to charge the 1,600 or 1,500, whatever the rent is. So I wanted empty units because I wanted vacancy so that I could renovate and further the business plan. Now, where kind of strategy is, and this is what most REITs are doing, right, is they're focusing on retention and they want to increase retention. So do we, because getting a unit back and renovating it isn't yielding the same premium that it used to. So I'd rather conserve the cash. I'd rather have a good paying tenant who has not given me any issues stay in the unit, and I want to keep heads in beds, basically.
Yeah, I like that, heads and beds.
Yeah.
Yeah, it's it's maybe not as prevalent, but it is something that we deal with in the single family space too. Like,
Yeah.
okay, do we want to keep this tenant in there at a little bit below market rent, or do we want to get them out, or try to see if
Yeah.
they'll pay more, and if they leave, they leave, and then we can update the property. We were just my wife and I were just talking about one. It's like, wow, we're like 50% under market rent with this one, but like she does so like the tenant is so good.
Easy tenant. Yeah.
It's just like
Yeah.
what's we'll just leave her in there, let her continue to
Okay. Yeah.
protect the house. She treats it really nicely, like so over the long term. Gene, just to really quickly, Gene asked, is a higher cap rate better?
It
At
depends. Are
Venus,
you the seller or are you the
yeah,
buyer?
yeah. Vina wants to buy at a high cap rate and sell at a low one.
Yeah.
Um, and then, is it safe to say that's not necessarily? Let's just let you read that one. That it's not.
Okay. What it's sold for, but is that a better determinant of its value? Oh, this is a good question. The answer is that it's actually both, because when we use cap rates, right, the cap rate takes into account how it performed and what it sold for, right? That's literally the measure. How did it perform versus how much did you pay for it? So it takes into account both, which is why we like cap rates to determine the value of an asset.
Yeah, it's one of your first stepping stones
Yes.
in order to kind of
Yeah.
dive further.
Exactly.
To kind of pivot into the capital raising side of things, I know there are some people in the audience right now live, and there are going to be people in the future that are trying to get into this space.
Yeah.
Are there any like newbie tips that you have
Yes.
getting
So
started?
many.
Yeah. Yeah,
All
yeah, I'm sure. Yeah.
Okay, the very, very first thing, if you have the thought in your mind, I am going to raise capital or I'm going to use other people's money. And this is a common mistake I see from the single family space when people are trying to move over. And actually, even in the single family space, because it's cost prohibitive to do it the right way. But the first thing you do is you reach out to a securities attorney. Notice I did not say an attorney. I said a securities attorney specifically. So we work with Nick McGrew out of LA. I've been working with him for like 15 years now. He's absolutely the best in the business, in my opinion. He does a lot of really good education. You guys should follow him on Instagram. His handle is Nick NIC the lawyer. Um,
Okay.
and Nathaniel, maybe you can have him on your
Yeah.
podcast. I think he'd be a great guest for people. They want to just like learn from a securities attorney. But so, okay, first you reach out to Nick because there are certain things that you can say or not say. And once you say them online, it removes the exemptions that you can use. And some of the exemptions that you can use are much better suited for your project if you don't post online. So, what a lot of us will do, right, when we first start out is we'll be like, oh my gosh, I have to raise all this capital. I'm so excited. I want to do this project, right? And then you'll go to your Facebook groups, right? Like your sub two or my multi mastermind or my mastering multifamily Facebook group, right? And you'll say, hey, I have this deal I want to work on and I'm interested in raising capital. Does anybody have any investors? And let's say it's a smaller raise. Let's say it's like a $1 million raise. Well, now that you've posted in any one of these groups or these communities, you've removed the possibility of using the 506B exemption with the SEC because now you posted in a public forum and you've generally solicited. And I'm not an attorney, so this is just hearsay. I don't go. You need to talk to a real attorney and
Yeah,
get
yeah,
this.
yeah.
Okay. So don't do that. First, talk to your securities attorney. Nick will ask you the questions that he needs to determine and advise you and guide you about which exemption makes sense for you. And then he'll say, okay, look, Vina, based on you wanting to raise $1 million, you have a lot of friends and family, you have a wide network. I think you should do a 506B raise because the threshold for that is lower too. You don't have to do third party verification. But you can't generally solicit. And you can take unaccredited investors, sophisticated but unaccredited investors. And I see this all the time. I also see the other mistake I see most commonly when someone is either trying to buy a single family deal or they're trying to buy a multifamily deal and they want to raise capital, but they don't want to go through the hassle of reaching out to a securities attorney, paying for a securities attorney, getting a PPM, filing with the SEC. When they want to like find the loophole for that, they'll go, "Oh, we're going to JV." And I'm
Mm.
like, "What do you mean?" And they're like, "Oh, we're going to JV. We're going to put these 4 investors into an LLC, and then the LLC will be JV'd on this deal with us." Fine, you can do that, but there's a misconception that using the term JV somehow means you're not selling a security. You are still likely selling a security. And if you're selling a security, you fall under the jurisdiction of the SEC and SEC rules.
Yeah.
And there's something called a Howey test where you can determine if you're selling a security. So the Howey test has 4 parts. Do you want me to go into the 4 parts, or is this like,
If
no?
you let's because I'm really curious about the mom stuff and the women stuff.
Oh, yeah. Okay, you
Yeah,
tell me.
if you want to listen to the Howie test, go check out Elena's podcast because I think you went over that on
There we go.
Elena.
Perfect. I love
Yeah.
it.
I did just to ask a kind of a follow-on question to that. If I post online, that's just ruining my ability for that one specific deal, right? That's not screwing me up for the future.
No. For that deal,
Yeah. Okay.
you're now removing, and it's not that it's even ruining that deal. It's just removing the possibility of exemption you can rely on. And a lot of times, especially when you're starting out, 506B is usually the first one most people should and do start out with. But you're taking that immediately off the table, which is why you want to talk to your securities attorney before you start posting online. And before you try making these like structures that you're creating. And if you try to like create like these JV structures, a contract attorney is going to tell you you can do that because it's not an illegal or disallowed structure. It's just a structure where you're still selling a security, which is why you need specialized information.
Okay. Yeah. You mentioned starting with friends and family. I
Mhm.
think that's where a lot of people are recommended to go to.
Yes.
Me personally, and I'm probably talking for some other people out there, bridging that or starting that conversation is challenging.
Oh, yeah.
How would you go about, starting a conversation with, hey, I need $150,000 to buy this house with your friends and your family?
Okay.
Hey, you
So,
just text them right off the bat? No.
yeah.
Yeah.
Well, kind of.
Yeah.
Okay. So here's what I always tell people who say this exact thing to me. Say, no, you're not asking them for money. You're providing them with an opportunity.
Mm.
Right? Because you're not asking them to give you this money. You're not asking them to borrow this money just at 0%. They're going to make a return, right? And hopefully a healthy return. And hopefully it's going to be all of the things that you're telling them it's going to be out of the gate. But you are giving someone an opportunity to grow their portfolio and have access to something that you have.
Mhm.
So I think like first that mindset shift is helpful. Secondly, like with a 506B raise, you have to have a pre-existing substantive relationship with your investors. So I always tell people start raising capital before you have a deal. And I don't mean start taking in the capital before you have the deal, but start having your conversations with your friends, your family, right? Hey, I'm working on this. I'm looking for a deal in Dallas that's going to generate a 12 to 15% IRR. If I find a deal like that that's like Class B risk adjusted returns, are you interested? And you're going to say yes or no. Most people say yes because they just want to see the deal. They don't want the FOMO of not seeing the deal, right? So now you start building out your investor database. And then when I have the deal, I can send it to you. But I can also create new relationships when I don't have a deal on the table. And then those people can be investors in the future. So always be building those relationships and be building up your pipeline of investors when you don't have a deal on the table.
Yeah, you have a pool of people that you can take something to when the time
Exactly.
comes. Yeah. Um, so to transition now
Yeah.
and put the mom hat on because you
Oh,
have twins. We just had a 1 month old.
yeah.
Or yeah, we just had our third a month ago, is what I should say.
Yes.
So that's been a challenge.
Yeah.
Yeah, energy,
The thick of
mentally,
it.
all the things. Yeah.
Yeah.
How are you? Because I know that that's super important to you, and you mentioned. But before we started, I was like, "Hey, what do what kind of things do you do for fun? You spend time with your kids. How are you juggling all these things that you're doing with your different partners and your different, businesses, and being a dedicated mom to these lovely young
So
ladies. Tongue twister. Yeah.
I knew what you were getting at.
Yeah.
The truth of how I balance it all is I do it very poorly. Uh, it's the reality. I can't be everywhere all at once, right? Like when I'm here and we're talking about multifamily and I'm working, someone else is taking care of my kids. Like they're at their transitional kindergarten right now. When I'm traveling, someone else is taking care of them. When I'm with my kids, someone else is taking care of my business, right? Like I have really great employees, really great partners. They take care of my business and they make sure my business runs. And so it takes a village to do anything and to do anything even remotely acceptably well, right? It takes a village. I have all four grandparents live walking distance from my house. I have a nanny. I have my husband. I have, they're in preschool or transitional kindergarten, whatever you want to call it. So, I have a lot of help. We have a large friend support network here. It really helps when you have a friend circle that is also invested in real estate because they understand it. Carolyn and Myron Briley, they're leaders in the Dallas Sub 2 community. They're like some of our closest friends here. And, Carolyn is a great support system for me in more than one way. And we can switch hats from talking about business, personal life very quickly, which, I always appreciate. But yeah, I don't think that there's a magic hack, but I will tell you that lower the bar for what is considered a win. Like I had twins, so I had no choice but to do that.
Yeah.
Oh, hi, Giselle. Oh, she's so sweet. She sent me the cutest memento about when we lost our dog about a month and a half ago now. And she sent me like a little, I don't know if it's an ornament, but like a sun catcher. It was so kind. Sorry, distracted. Distracted. This is exactly my life. So, I don't think that as parents and as business owners and as people who just like, there's no point to living your life if all you're going to do is work and you're not going to enjoy it at all, or you're not going to spend time with the people that you love. And so I think there's something to be said about like a healthy balance. I know right now on the internet, there's like a lot of trending toward this like toxic work style where it's like wake up at 4 a.m. and take an ice bath and work out for 2 hours and then go and work until midnight and then do it all over. Like that sounds horrible to me.
Yeah.
I don't want to do literally any of the things in that kind of grind culture, right? That's what it's called, grind culture.
Yeah.
I'm more like, okay, let me figure out the things that I have to do. I get paid to make really good decisions. Make those good decisions. I prioritize the time with my kids above everything else. Everything else can wait. And what I found too is as I've gotten more into my corporate career, there are very few things that are so urgent they have to happen right now. Very few things, almost nothing actually.
Yeah.
And that's true at home too. Like there's very few things that are so urgent that you have to drop something right at that moment. But I'm willing to do it for a lot lower threshold with my family than I am for work.
Yeah. That's I was talking to our operations manager yesterday or the day before about protecting her time when
Yeah.
she's with her family. And like, she's like, well, the call came in and there was this thing. I'm like, I could have waited. Like you work so hard as it is, and you say no to so many things during the workday. Like when you're with them and it's your dedicated time, I want you to be dedicated.
Yeah.
Yeah. And it's tough as
It's
a,
hard to do that. I mean, I still am not very good at it, but like
yeah.
whenever an investor would reach out with like a question, my instinct was like respond right away because I want to service them and I want to, show them that I appreciate them. And this is what I want. I want an immediate response because I'm impatient, right?
Yeah.
But the reality is their question can either be sent to my team for follow-up during business hours, or I can follow up during business hours. And most of our investors, like 99.9% of them, are like totally understanding and appreciative of that. And they're just sending it because it's convenient for them to send it at that time, not because they expect me to like hop out of bed at 2 a.m. to look at some distribution that they think that they meant. Like it doesn't change for the next day.
Yeah. Yeah. I love that. And you mentioned something that I actually heard from Pace
Mm,
Morby,
yeah.
that he he only friends other parents that are like kind of like-minded with him.
Oh,
You
really?
know, other entrepreneurs, other real estate investors, other business, other high-level people.
Yeah.
Like, I'm only going to let my kids hang out with them. That way I can hang out with the parents and have fun with them. You
Yeah.
mentioned, the Briley, yeah, Briley.
Rileys, yeah, the
Yeah,
Rileys. Yeah,
yeah.
I'll say like it, yeah, our daughters are very close. Like they have two daughters, I have two daughters. They love each other. They get along so well. It's so easy. Um, I will say I have a little bit of a different perspective on that though.
Okay.
I am somebody, and like I've gotten told this at various times over my whole entire life, but like I've been told that I collect friends, meaning I have friends from literally every walk of life, every background, every culture, every religion, every socioeconomic class. Um, and for me, it's because I think it enriches my life when I have more diversity around me. Now, obviously, like with my friends that are working jobs where they're, just struggling, trying to like make ends meet, we're having different conversations. We're doing different things. I'm not like, hey, should we just go to Miami this weekend because we all have free time? Like, that's not the conversation I have with them. The vast majority of time that I spend with them is definitely with, or the vast majority of time that I spend is definitely with the people who are more aligned in like what we're pursuing. But the only non-negotiable for me is that they have a growth mindset or an abundant mindset. That's
Mm,
all I care about.
yeah. You can't be bringing me down.
Yeah,
Yeah.
exactly. You can't bring me down. But if you're working on whatever you're working on, like go for it. But I gravitate toward like-minded individuals naturally, and I spend most of my time with like-minded people. But I have a lot of friends from different walks of life.
Yeah, I think I like that, the like kind of well-rounded and
Yeah,
seeing different perspectives and different things from other people. Like, if we're just hanging around real estate, commercial real estate investors all the time, like, we're secluded from, hearing about all the other things that are going on in the different aspects of culture.
it's
Giselle did ask, how are you taking care of yourself?
oh,
Yeah.
Giselle. What kind of a question is that? Very badly is probably the answer here too. That's probably like my answer on 90% of things you're gonna ask me.
Yeah.
I what do I do? I mean, honestly, for me, spending time with my family is like how I recharge. I'm a people person. I like to be in front of friends, family, strangers. It actually doesn't really matter a lot to me.
Yeah.
Um, I'm a big foodie, so whenever
Okay.
I get a chance, like my daughters and I will like we go on dates, and I try to because they're twins, right? So I don't want them to like always be treated as one person. So we try to like separate and spend time with one and then the other. So like we'll go on like these fun little like dates, and we'll go try foods, or we'll go do something fun together.
I love that.
Yeah, it's
Yeah.
just that's like really what I like. And it's funny because most people think like self-care is like getting massages and your hair done and your nails done, and like I do those things because I feel like I have to, not because I enjoy them. Like it is so stressful for me to get a manicure because I'm like sitting there like this for like an hour and I can't use my hands. Like this is the worst waste of time literally ever.
Yeah. I
So,
I
you
feel that
know,
way with getting my hair cut, and that's just getting my
yeah,
hair cut. Yeah, I hate
like
getting my
getting my hair done for me to like get my hair like dyed and cut and colored and all the things. It's like a 9-hour process.
Oh, mine's like half an hour and I hate doing it.
Yes, this is the difference between men and women, and I just have a lot of hair,
Yeah,
a lot of hair,
yeah.
and
Ugh,
so I have to really like commit to it, and I take my laptop and whatever, but it's not the same as working from a desk.
right. Yeah, I could see the men versus women aspect of
Yes,
things. When Brittany was going to her W-2, this was a couple years back now, since she left, she spent so much time in the morning getting ready to go. And I'm like, I just get out of the shower and I'm like, ha ha ha, and I'm out of the door. Yeah, man, man.
yeah, it's crazy.
Yeah,
Like my husband can get ready so fast, And I'm like, I need a minimum of like 30 minutes. And
Yeah.
then also there's also like the interruption you have too, right? Like with all the kids who need the things. And my one of my daughters is really into makeup. So she's like, Mommy, can I have makeup too? And I'm like, you have to stop doing my makeup to put her makeup on. And it's like a whole thing now. But I enjoy spending time with my kids. We like to like watch shows together. We like to play. I love playing board games, so we play a lot of board games together. But yeah, I think like that's my self-care.
Jesse asked an interesting question on this topic is how are you incorporating this growth and self-development
Oh,
into your parenthood?
I could talk about this for like 17 hours
Yeah.
straight.
We have
Uh,
like 3 minutes.
okay, I'll try to condense 17
Yeah.
hours in 3 minutes.
Yeah.
Okay, so here is I'm very intentional with this. Like if there is only one thing in my life that I do consistently, it is make sure I'm incorporating mindset into my girls every day. So I have three things I tell them every day. I have three goals for them. The first goal is every day I want them to learn something, right? Because that's easy. It could be anything, right? Like it could be a fun fact. We talk about like different words, what they mean. We talk about science concepts. Like we talk like the other day we were talking about like buoyancy, and
Yeah.
they learned that ice cubes float in water, and we talked about density and buoyancy and whatever. So like every day I want them to learn something because curiosity keeps your mind growing, and that's how you develop an abundant mindset. Second goal for them is that they help someone. So I tell my kids often they did not earn any of this stuff that they have. They just won the birth lottery. That's it. Right. Like they were lucky to be born to us. That's it. This is all our stuff. This is all something that we own. Um, and so they can have it. I never say no to them. I never say, like, no, you can't have this. Yeah, I literally feel like I'm raising little billionaires, especially because I'm like, girls, we have a free weekend. What do we want to do this weekend? And one of my daughters literally said, Mommy, can we go to Miami? We haven't been there. And I'm like, no,
Yeah.
what do you mean?
Yeah.
It's like, what do you mean Miami? And she's like, in Florida. And I was like, no, I
I
understood
know,
what
yeah.
Miami is, but it costs money to do that, right? So I'm like, I don't tell them no.
Yeah.
I tell them like, yeah, do you have money? And I'll
Mm.
go, no. I'm like, okay, well then how are you going to pay for it? Um, Even yesterday, one of my daughters, we went to Walmart and we bought their bears clothes. I could rant about that for 17 hours too. I won't, but was a bad idea. I thought it was cute. It was not cute. It was not fun. I hated it, but I love spending time with them. And one of my daughters had money that she had been budgeted or allocated for her bear's clothes. My other daughter did not.
Mm.
I said, okay, well, I know it's not fair. It feels unfair. I get that. Life isn't fair. And she was like so upset, throwing a tantrum. I'm like, no, you don't have money for this, and this costs money. She goes, okay, wait, I have $5 in my piggy bank. And I said, okay, if you want to spend it on that, you can. But remember, then you can't invest that money, and then your money can't grow, and that's up to you. She goes, okay, and I said, and I don't think $5 will be enough. You'll probably want 15, so you'll probably need to figure out how to get 10 more dollars. So she turns to me and she goes, can I have $10? I said, no, I worked really hard for that $10. You can't have $10. She goes, can I borrow $10? I said, sure, but I'm going to charge you interest. She goes,
Mm.
okay, how much interest? And I said, I mean, you're asking for a short-term loan with no security that I'm going to get it back. So I'm going to charge you 20% on this money. And she goes, okay. And then she turns to my mom who was there. And she calls her Mama. She says, Mama, can I borrow $10? I'll pay you with interest. And I goes, okay, sure. How much interest? And she goes, I'll give you 10%.
Yeah.
So
Nice.
she's like, okay, I'll take it. Because they understand interest. They understand you want to earn high interest and you want to pay low interest,
Yeah.
right?
Awesome.
So she borrowed $10 and she has to pay back $11. And then this morning, I wake up at 5:45 a.m. to these little voices running around outside my bedroom. And I call them in. I'm like, what are you girls doing? And they're like, we're just earning our money. We're doing all of these chores to earn our money. And I'm like, okay, great. Yeah, and that's exactly it. I want them to problem solve. I don't want them to think it's no. I want to problem solve. I want them to problem solve. I want you to figure out how to solve problems for, in this case, rich people, right? Your parents. How do you solve problems for me that I want to pay you? I don't want to just give you money. I want you to earn the money. So every day they have to help someone because they won the birth lottery. I know I went off track on my three.
No, yeah, you're good. Yeah.
Do I vet these children to see if
Yeah.
they can pay me back? No, I don't. That's why I have to give them very high interest loans.
Yeah.
I feel there's a very high chance of default with them.
Right. Yeah. We're
Um,
risky borrowers.
right, exactly. Very, very low credit
Yeah.
borrowers for sure. But they earned it back like on their own. They went and did all these chores, and I mean, they did my house chores, not my
Yeah.
mom. So
That's
it really
awesome.
worked out in my favor here. And then the third thing I do every day without fail, is I ask them to fail at something. This is the
Mhm.
most important one. If I can't do anything else, I ask them to fail at something every day, because failure is a stepping stone to success. And I want them to get comfortable with failure. I don't want them to be afraid of failing. I want them to embrace it. And I celebrate their failure. So when they tell me they failed at something, I act like they just landed on the moon. And I'm like, oh my gosh, you failed at that. I'm so proud of you. We do like a dance. I ask them, how do you want to celebrate when they have a really big failure? But I see it in real life. I see it manifest. Yeah, as long as they don't fail at paying me back, which they for sure will. I have
Yeah.
no doubt about this. But I have them, they filled out a contract. She signed a contract for the $11 that she has to pay
Okay.
back.
Yeah.
So, I have them write contracts. I have them fill it out. I have them sign it. I started doing this when they were 3 years old. They wanted to do a lemonade stand. I was like, great. How are you going to pay for the materials? And then, they borrowed $25 or they borrowed $20 and they paid me back $25 from their lemonade stand. Now we have to have a conversation probably around like price gouging. Because they charged grandparents like $10 for a glass of lemonade, which the grandparents did not help illustrate supply and demand at all because they happily paid it.
Yeah.
So that, that's a tougher lesson we need to get to at some point in the future.
Maybe when they're 6. Yeah. Yeah.
Yeah, maybe
Yeah.
when they're 6. Well, they
I
used to tell me when they were 6.5, they would be adults. And
Okay.
they'd go, Mommy, when we're 6.5, I'll be an adult and then I can drink a beer. And I'm like,
Okay.
that's not the
Awesome.
only thing adults
Yeah.
do. But they think at 6.5 they will reach adulthood status.
The things the kids say, the cousin that I mentioned at the top of the
Yeah,
episode, this is going back 4 or 5 years now, so she was really young.
yeah.
When Brittany and I got married, she was like, "Oh, you're parents now." She just
Oh,
thought like when you get
you married
oh,
your
not
parents.
quite, yeah, not quite, but I
Not.
these 3 goals, this seems like something that's not just for kids, right?
Yeah, it's super easy. I talk about this on stage a lot because it's so easy for any one of us to implement, right? Like help someone. You're looking for opportunities to add value to someone else. That is a useful skill set in every facet of your life. And it's like just a good practice to being a good human.
I love this. I want to make sure that I'm respectful of your time. We're coming up towards the top of the hour here. I wanted to chat about the how you're empowering women.
Yes.
Is there like do you have like a 60-second soundbite about this? I'm sure you do.
About
Yeah.
women. Yes.
What you're doing there in that space and how you're, yeah,
Yeah, it's
yeah.
super important for me. It's important for me that we see diversity at the highest levels, not just like in the company at like the admin or entry level positions. So one of the things I do is I make sure that every opportunity I get, I name another woman, regardless of where I am, who I'm talking to. I will always make sure I mention another woman to share my platform
Mhm.
and to make sure that I am making other people aware of incredible women that are doing incredible things. So that's one micro action I take daily. The second one is when our trust and our family invests into companies, angel invest, deals, whatever, we look to see that there's diversity at the decision making level and above. And if there's not, it's like an immediate no. I don't even care how good the business plan is. I
Mm.
want to see either your C suite or your decision making level, whatever that is for your company. Or if you don't have it there, I want to see a board of advisors that has women, that has minorities, that has people that are representative of Americans in general. So that's like the other big thing I do. I'm really careful about how I talk, right? Like a lot of times, and you guys can like pay attention to this now because I'm sure you'll find this to be true, but like society conditions us to default to male pronouns for most things that are deemed important or elevated, right? So a lot of times when you're talking about investors, like, oh yeah, and then he could blah, 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 blah. And I'm like,
Mm,
no. So I default to she, I default to the female pronoun, or I
okay.
try to like alternate, right? Like I'll say he sometimes, she sometimes. But I'm very, very intentional with that. I'm intentional when I talk to my kids, like when we're talking about an animal, I'm like, oh, do you think she blah, 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 blah? Because the default is to he so
Mm,
often. And so I try to like be really mindful and very intentional about just how we talk. Cause like those little micro sayings or micro opportunities to adjust like society's broader expectation of who women are. And I don't know, and maybe I'm like overcorrecting with my daughters. The other day I was telling my daughter, I was like, yeah, she's going to be the whatever, the leader of her company, or she's going to start a company or be a great investor. I can't remember what I was talking about. And I was like, because women are powerful and they're strong and they're smart and they're capable. And she goes, mommy, that's not true. And I was like immediately mortified. And I was like, what do you mean? And she's like, that's not true, mommy. Boys are smart too. Boys are
oh, yeah.
I was like, oh, okay, we've overcorrected now. We got to come back to the center of the road now. And so,
Yeah.
you
Yeah,
know,
I'm gonna be conscious of this as I'm talking now, because I think I would lean towards Shanna here, that I would tend to say they, yeah, but we'll see. I'm gonna
you'd
be
be
paying attention to
surprised.
this. Yeah.
You'd be
Uh,
surprised.
to piggyback, I guess,
Yeah,
on what you were saying about bringing women into
yeah.
your opportunities, do you have any guests that you would recommend for the podcast?
Many, many.
Okay.
Rosie Noel, immediately out of the gate. You should have
Wait,
her.
what was it?
Rosie Noel.
Okay.
So she's rosienoel.com or the Rosie Noel on
Okay.
Instagram. She's my mindset coach. She's fantastic. I actually
Okay.
hung up my call with her to get on this call. Um, so highly recommend her. I also, Carolyn Briley, phenomenal real estate investor. Like I said, I can't say enough good things about her. I could give you 100 names right now.
I'll
I'll
ask an
give you
email.
those.
Yeah.
Yeah,
Yeah.
I can give you more for sure.
Yeah. Before I boot you out here,
Yeah.
what's the best way for people to kind of connect with you, to reach out with you?
Yeah,
Yeah.
so you can join my free Facebook group. It's called Mastering Multifamily with Veena Jetti. But the second is Instagram. I'm on all the social media platforms as Veena Jetti, VEENAJETTI. But if you want to like actually connect with me, I respond to my own messages on Instagram. So you can always message me on Instagram. Or if you want to learn about like investing with me as a passive investor, we're open to accredited investors. You can go to Vive Funds, VIVEFUNDS.com, click on our investor portal, and you'll see all of our stuff there.
Yeah. I want to make sure I'll get those linked in the show notes here, so
Okay.
you can just
Thank you.
click on them. I forget what her name was. Angela, I think. I'll
Yep,
ask
Angela.
Angela to send them over to me.
Yes.
Yeah. There you go, Shanna. Um, I appreciate you being here. If you have to bounce, bounce. If not, we'll
Yes.
decompress here.
Amazing.
After
Thank you
the
so
call.
much for having me. I appreciate you.
Thank you for being on it, Vina. It was a pleasure. That was Veena Jetti. I had a feeling that the conversation was going to end up long, and I was going to have to cut off. We didn't get to really diving into the empowering women thing, but I think she did a great job of kind of keeping that concise. I appreciate y'all for being here live. I hope you got some value out of the show today. Leave a comment on the show on the YouTube channel here with one takeaway that you had. That way I can continue iterating the show towards your needs and stuff as we go forward. If you haven't already, hit the like button on there. And if you're not already subscribed, subscribe to the channel. That way you can continue to get content from me as we go forward. I appreciate y'all for being here. Until next week, Wednesday at noon Eastern time. Later.